Hi, welcome to this video today, which is on the 9th of December. It is Monday. We're just going to be looking at the British pound day, giving our updated outlook and forecast. We're going to look at three pairs. We're going to look at GBP, USD, Euro GBP, GBP, AUD. Will go to the charts in a moment. Now, we've been bullish of sterling for a good few months, and we still remain bullish. Now, in terms of an election coming up, obviously, on Thursday, a lot of people are saying, well, if the Tories win a majority, it's discounted. No, it isn't, in our view, and I'll go through why in a moment. We would see sterling as soaring to the upside on a Conservative victory, but we don't see much downside, even if we get a minority coalition opposition. I'll go through my logic in a moment when we get to the charts, obviously. But what is actually influencing my view of the pound, and I find it quite surprising actually, is what smart money and speculators are doing on our favourite sentiment tool, which is the COT net traders positions. That's very much influencing our view in terms of the levels on the three pairs we're going to look at. Now, in terms of looking at the charts, we're going to do that right now, but please do keep in mind, it is my view. As of right now, it can of course change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, including the three we are going to look at right now, you can get live access to our member center by simply clicking on the link beneath this video. Right, we're going to look at the COT net traders positions first, and then obviously we'll go through our levels in terms of the three pairs today. Right, COT net traders positions. Right, we're on GBP USD COT net traders positions first, and in terms of the chart, obviously, well, not obviously, but the commercials are in red. They're the smart money hedgers, large speculators in green. Now, in terms of this pair, we got really interested in it when we came up here. Okay, commercials built up a 2-year high in terms of longs. Specs go to a 2-year extreme in terms of shorts. It's a strong level, the 120 level on the monthly chart. Hard Brexit is discounted, and up we go. So it's been a nice move. What I find interesting is how the chart looks now. In terms of the commercials, they've dropped out of hedges, but they still remain long. The speculators are still short. In terms of speculators, obviously they've come out of some of their shorts, but they haven't been tempted to go long yet. Now, I find that kind of surprising, actually. A lot of people are saying, well, if the Conservatives win, it's discounted in the price. I think a lot of institutions are, when the result comes out, big spec money will come in, pile in long, and push the pound higher. The specs can drive the price up. We know that. We're only looking at the commercials for potential turning points. The pound could be set for higher prices. In terms of which party wins the election, we'll discuss that in a little bit more detail as we go and look at the pairs individually. But first of all, I'm just going to look at the polls. Right, just got the latest polls in terms of how the parties stand. You've got the Conservative Party of Boris Johnson on 43%, Labour on 33%. There's a 10-point margin. Tories need 7% really to get a majority. If they're above 10, that's good, obviously. If they get above 14, it's a landslide with the way the seats divide up. Now, I personally feel it's too late in the day for Labour to close the gap. Now, I do read a lot about marginal voters or voters who haven't decided yet swinging the election. I just don't see it. I think most people have decided already. Also, in terms of polls, the Tory party's support tends to be older than the opposition parties and is more likely to cast their vote. Okay, so I'm looking for a Conservative victory, but if Labour were to win and form a coalition, I wouldn't see that as being particularly bearish for sterling. You might get a knee-jerk reaction, sell-off to the downside, but they're actually more user-friendly to the EU than the Conservative Party. So if it did sell off sterling, it would just be a knee-jerk reaction. If the Tories win, there's plenty of speculative money to come in and push sterling up. Right, let's go and take a look at the charts, and we'll start first of all with GBP USD. Right, GBP USD daily chart, just using the chart from our member centre. Now, in terms of the British pound, we've been following it up since 120. Latest position is at 128.30, 131.52. So just over 300 pips profit. We're holding our stop back at this moment in time at 129.50. And basically, the reason I'm doing this, it might change as we come into the election. Obviously, you can check my updates then. But I think 130 should provide really firm support. You get a big run up to 130, then this sideways action, trying to get through the level but can't. Then you kind of wind up to come through it, decisively break, and get through the next round number. It's double trend line support. So it dips back to 130, I think, are buying opportunities. And if you got through 130, I'd just buy back through the round number. Don't see the 128 level being taken out decisively. But in terms of a dip, that's going to be, I think, obviously, if the opposition look like they're going to, or the opposition wins, sorry, there's a coalition or whatever they put together. What if the Conservative Party wins? Well, there's plenty of spec buying power to come in on the sidelines, in our view. And that would make the pound also buy on strength. We're just below the 132 level. Where's the key level on the upside? We'll just go to the monthly chart. I think there. So basically, I'll just get my cursor right. Sorry, I can't get my cursor correct. There we go. 132.78. You've got kind of double top there. Blue, red came down. Now we're going to come up and test the level. So you could just basically come through that double top, 132.80, something like that. You can even wait for 133 to give way, because if sterling starts going to the upside, I've got my first target at 140. So there. And then obviously this is the Brexit candle. We could retrace all of the Brexit decline to 145. And keep in mind, the whole fall in the British pound was just due to Brexit uncertainty. In my view, there's no chance of a hard Brexit, whatever side wins. I just think sterling is going up. Any move to the downside, it would just be a knee-jerk reaction. Pound would be a buy. And also on an upside breakout. Right. Oh, no, before I leave this pair, what I should mention is there is another big event for this pair this week, which is the Fed coming up on Wednesday. I think that might send the pound south, but not through 130. Okay, I think the Fed might be really disappointing the market in being not too dovish. Right, let's move on to our next pair, which is going to be Euro GBP. Right, Euro GBP daily chart, and again, a nice downtrend, but you can see the volatility has dropped a little bit, and then we get the sell-off here. Volatility a little bit lower than in the first phase of the downtrend, but you'll see it in the monthly chart in a moment. We've broken a key level, which is 85, and that's around 85.50. So if we rally back towards this level here, look to sell any weakness. I'd keep the stop back at this moment in time behind 86. The downside potential in this one is big. Let's have a look at the monthly chart. There, you've kind of come through the 85 level, which I see as significant. I'm not worried about this mess over here. I'm interested in these candles here. 1, 2, 3 tails, okay, where you got rejections. Where are we going to go? 80, and then possibly down to 75. It's a big trend, yeah, but you can see it was a big trend up. Yeah, when you see the monthly chart in association with the daily chart, you can see the downside potential in this one. It's big. So any bounce is a selling opportunity. Right, let's move to the last pair, which is going to be, GBP AUD. All right, GBP AUD daily chart. And again, a decent move to the upside, well, a really good move to the upside, and just off daily chart highs. Okay, now in terms of, again, with our position, we've got 500 odd pips. We're still holding our stop back at the moment behind the 190 level, which I think is pretty firm support in terms of tried to get above it there, came back, bashed into it, got above it, below it. You kind of oscillated around it, got through it, then we pushed up, and now we are where we are. There's support just around 100 pips lower, second level support, stop behind there. A dips back to this level, buying opportunities, or if we went through it, just buy back through the level, or just come through the high, the next round number, 193. If you look at the monthly chart, nice and firm. I think we should retrace the whole Brexit candle up to the 2 level here. Okay, we could run on even higher to the upside. I don't think the AUD has got too much going for it at the moment, and I like the look of the GBP on all three commodity currencies. So, yeah, I'm very bullish of the British pound. I've seen a lot of people, in the media argue, well, the Tory majority, that is factored in. Yeah, I think the key is, what spec money is doing, and spec money hasn't really made the move yet to going aggressively long the British pound. I personally think they will on Tory majority, and like I said, I don't see too much downside in sterling if the opposition win. The pound fall was all about Brexit. The opposition aren't in favour of Brexit. They're more European friendly. So any dip for me would be a buying opportunity. There's going to be no melt to the downside in the British pound, in my view. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.